As the U.S. markets concluded the trading week, Snap Inc., trading under the ticker symbol SNAP, closed at $8.55, marking a notable increase of 4.01% for the day on Friday, October 3, 2025. This upward movement, while seemingly a positive signal, masks a much more complex and challenging reality for the social media company, a reality that many investors may be overlooking in a quick glance at the day's performance. The expectation is that a stock closing in the green is on a solid upward trajectory, but the deeper reality is that Snap is navigating a treacherous landscape, and this single day's gain might be more of a temporary reprieve than a sign of a sustained turnaround. The prevailing belief has been that Snap's dedicated young user base and its leadership in augmented reality provide a strong moat against competitors. However, the data suggests a far more precarious situation, one where user engagement in key markets is waning and the path to consistent profitability remains elusive. Many are looking at this stock through platforms like Robinhood, attracted by its low share price, but a comprehensive analysis reveals a narrative filled with both significant risks and potential yet unrealized opportunities. The recent stock movement for Snap has been a roller coaster, reflecting the broader volatility in the tech sector and the specific pressures on the digital advertising market. While the 4% jump to end the week is encouraging for bulls, it's crucial to contextualize this within the stock's performance over the last 52 weeks, where it has seen a high of $13.28 and a low of $6.90. The stock is currently trading well below its peak, indicating that significant investor confidence has eroded over the past year. Trading volume on Friday was substantial, with over 174 million shares changing hands, suggesting a high level of interest and activity. But this could also be indicative of significant institutional repositioning. Recent filings show a mixed bag of institutional activity. While some firms have been adding to their positions, notable players like SRS Investment Management and FMRLC have significantly reduced their stakes. This divergence in institutional sentiment points to a lack of clear consensus on the company's future, a red flag for anyone considering a long-term investment. This is the kind of detailed information that users of more sophisticated platforms like interactive brokers would be closely examining, looking beyond the daily price swings to understand the underlying currents of institutional capital flow. The macroeconomic environment continues to be a major headwind for Snap. With persistent inflation and rising interest rates, many companies have been forced to pull back on their advertising budgets, directly impacting Snap's primary revenue stream. While there are some indications that direct response advertising is showing resilience, the broader brand advertising market remains soft. This is a critical issue for a company that is still not consistently profitable. The expectation among many retail investors, perhaps those utilizing platforms like SoFi Invest for its user-friendly interface, is that a company with such a massive user base should be a cash-generating machine. The reality, however, is that monetizing that user base effectively in the face of intense competition and economic uncertainty is a far more difficult task. Analysts are divided, with a consensus hold rating, but price targets vary wildly, from as low as $8 to as high as $12, reflecting the deep uncertainty surrounding the company's prospects. It's important for investors, whether they are managing their own portfolio through a Schwab Intelligence Portfolios account or actively trading on a platform like Fidelity, to understand these external pressures and not get caught up in the short-term noise of daily market fluctuations. At its core, Snap Inc. is a camera company. Its flagship product, Snapchat, is a visual messaging application that allows users to share photos and short videos, known as snaps, that disappear after being viewed. The company's business model is almost entirely reliant on advertising revenue, which it generates by selling various ad formats, including Snap ads, sponsored lenses, and sponsored filters. The company has also made forays into hardware with its spectacles, camera-equipped sunglasses, though these have yet to become a significant revenue driver. One of the company's key differentiators has been its focus on augmented reality, AR. Snapchat's lenses, which overlay digital effects on the real world, have been immensely popular, particularly with its core demographic of 13 to 34-year-olds. This leadership in AR is often cited as a major reason for optimism about the company's long-term prospects. However, the reality is that translating AR leadership into sustained revenue growth has been a slow and arduous process. The expectation was that brands would flock to AR advertising, but adoption has been slower than anticipated, and the return on investment for many of these campaigns remains unproven. Looking ahead, the future of Snap Inc. is fraught with both potential catalysts and significant risks. On the optimistic side, the company's continued innovation in AR, its strong connection with a coveted younger demographic, and its growing international user base are all potential drivers of future growth. If the company can successfully monetize its AR platform and fend off competitors, there is a clear path to a much higher valuation. The introduction of new features and partnerships could also provide a boost to user engagement and revenue. However, the risks are equally compelling. The company's heavy reliance on advertising revenue makes it highly vulnerable to economic downturns. The fierce competition from larger and better-funded rivals could continue to erode its market share and pricing power. Furthermore, the company's inability to achieve sustained profitability is a major concern for investors. The expectation that Snap will eventually grow into its valuation is being tested with each passing quarter of negative earnings. For those considering an investment in Snap, it's crucial to weigh these potential rewards against the very risks 100%. Whether you're using a self-directed individual brokerage account or relying on the guidance of a Fidelity wealth management professional, a thorough understanding of this dynamic is essential. In summary, the recent uptick in Snap's stock price, while a welcome development for current shareholders, should be viewed with a healthy dose of skepticism. The expectation of a quick and easy turnaround for this social media company is not supported by the underlying reality of its financial performance, the competitive landscape, or the macroeconomic environment. The company is at a critical juncture, and its ability to navigate the challenges ahead will determine its long-term success. While the allure of a low-price tech stock with a popular product is understandable, a deeper analysis reveals a much more nuanced and uncertain picture. The tension between the expectation of growth and the reality of the company's struggles is what makes Snap such a compelling yet risky proposition for investors. The path forward is far from clear, and those who choose to invest in Snap should be prepared for a volatile ride. The narrative of a simple growth story is a compelling one, but the reality is that Snap's future is anything but certain. Don't forget to subscribe to US Stocka for more in-depth market insights, stock updates, and analysis on the companies shaping tomorrow's markets. Stay ahead, stay informed.